Welcome to this week's market drama. We'll begin with the S&P 500, which was up 3.7% for the week. It is now up 2.2% for the year. NASDAQ was up 2.4% for the week. It is now up 1.7%. Value stocks outperform growth stocks. And a big reason for that is that energy prices went up. So a lot of the energy stocks rally, which tend to be value stocks, as well as we did have the financial sector start earnings season, and the banks posted really strong earnings, right? So JP Morgan, Goldman, Citi, Wells Fargo, all were up in the back of their earnings. They tend to fall into the value category, right? So value stocks rallied stronger than growth stocks. There was also the fact that the bond yields stabilize, right? If you look at this year so far, the biggest surprise has been how fast bond yields have gone up, right? Like the 10-year Treasury yield went up more than 60 basis points from call it like mid-December, early December to recently, right? To the prior week. And that really scared the stock market, right? Because when yields go up, it's either telling you that inflation expectations are going up, or that economic growth, right, real economic growth is going up. Sometimes it's a combination of both. The stock market's afraid of inflation kind of peeking its head upwards again, because that might send the Federal Reserve to not only pause lowering interest rates, but maybe even decide to have to hike them back up, right? So that's kind of been the rearrangement, if you will, of the stock market. So this past week, the good news was that bond yields stopped going up. In fact, they fell a bit. And the reason was that we had CPI inflation data come out. Core CPI edged lower to 3.2 from 3.3. That's the first drop since July of last year. And shelter inflation came in at 4.6% year over year, which is the lowest we've seen since 2022, right? And the trend continues for shelter inflation to come down. It's like the stickiest part of inflation, but also once kind of it starts moving in a direction, it tends to kind of keep going in that direction for a fair bit. So that paints a good picture for inflation, and hence why the stock market also went up and bond yields kind of had a drop on yields. So that's the story so far this year. Is let's keep an eye on bond yields. If they keep going up higher from where they are now, it could scare off, if you will, the stock market. If bond yields stabilize and start falling a little bit from the levels that they are at, and is supported by data like this, right? Inflation data that continues to show that it's pointing downwards, that we could kind of get back to focus on earnings, which so far have been fairly strong, as I mentioned, with the banking sector. But more broadly, the S&P 500 earnings are expected to increase 11% in the fourth quarter of this past year, year over year, which would represent the strongest growth in over 3 years, right? So the earnings story is there. If inflation continues to show numbers like we just saw, maybe yields start to stabilize and fall, and then equities could focus back on earnings. But for now, there's been this seesaw between focusing on the macro and the concerns of how fast bond yields are going up, and that's signaling that the Fed might not lower as much or even pause lowering interest rates for now. And if that starts to stabilize, then the market focuses on earnings, which is obviously a stronger story. And that, we have weeks like the ones that we just had last week. So those are kind of the macro trends that we're focused on. That is it for this week. Stay tuned for next week.